Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a massive welcome to the show and to the Equity Mates community. My name is Bryce, and today we're covering off some of the big market headlines from earnings season. We've got Mr. Beat Up joining us to chat about stocks that are down but not out, and we have a community question about currency. To chat through it, as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Great to be here. Very excited for this episode. It seems like these days the market really is waiting for just one piece of news, and that's Nvidia's earnings.
Literally.
And we got it.
Literally, we did get it. I remember last night before we left the office, you get those the market wrap emails from everyone that you sign up to, and it's like literally waiting for Nvidia. So Nvidia has reported overnight and the numbers continue to astound.
Yeah. Let's not delay. Let's get straight into it. What's happening in the news?
News and markets.
So Nvidia did report last week, Ren, and the numbers continue to astound. $26 billion in Q1 revenue.
Yes. I think we need to give these numbers in the context of what they were last year as well.
Yeah.
Because the law of large numbers, 26 billion, you kind of lose all perspective. Here's the perspective. 26 billion in a quarter in 3 months this year compared to 7 billion last year.
Unbelievable.
Unbelievable.
Net income of $14.88 billion compared to $2 billion a year earlier.
Yeah. Just from 2 billion to almost $15 billion in profit in a year.
It's unbelievable.
Wild.
It's unbelievable. So the shares cracked $1,000. They have announced that they're going to do a 10-to-1 stock split, and the stock was up about 7% after hours.
Also an increased dividend as well. That always helps. So, yeah, look, a pretty phenomenal story. Nvidia is just riding this AI wave. It is the best picks and shovels play you're going to have for AI, because if you're building an AI data center, if you're doing anything with AI, you really need their H100 chips because they're best in class. Everyone's trying to catch up to them. AMD, a number of other chip makers are trying to catch up, but no one's close. The really interesting dynamic is their biggest customers are also trying to compete with them. I think Alphabet, Microsoft, Amazon, and Apple have all got varying degrees of projects to build their own chips. So it's this really interesting dynamic where the companies that are fueling all of Nvidia's growth are also trying to eat their lunch. Who knows how that plays out?
Yeah.
Well, I mean, the market seems to be big enough for everyone to eat at this point.
Yeah.
Yeah.
So huge numbers coming through. We've now got to wait another quarter until, everyone holds their breath to see what the next quarter holds. They did provide guidance, which is, I think they said they're on track for about $28 billion in revenue for the next quarter. So we'll see how that pans out. In other news, last week, News Corp signed a $250 million deal with OpenAI for a contract of about 5 years.
Really undermining the New York Times lawsuit.
This is unbelievable, yeah. So essentially what it means is that News Corp are giving OpenAI chatbots or OpenAI access to their news archive, as well as any new material that they'll be releasing across their key mastheads to essentially train their chatbots.
Get ready for GPT-5, Denying Climate Change Edition.
Yeah, it's a bit, yeah.
Yeah. So for people who are unfamiliar, like the news world was sort of united in this. OpenAI has ripped us off and trained their AI models on our IP without giving us any revenue for it. And the New York Times is leading a lawsuit against OpenAI at the moment. And it seems like OpenAI are slowly going to start peeling off new news organizations and signing these deals with them. News Corp, they can always sniff a deal.
Yeah.
They got it from the big tech companies in Australia a few years ago. Now they're getting it from OpenAI.
It's just going to end up what we have with Google Search. Apparently part of this, OpenAI have agreed to include, obviously, News Corp articles and whatnot as the main source of information. If you're Googling, put them at the top of search results.
That ChatGPT doesn't give search results. It gives answers. That's the problem.
But now it can, you can find the sources.
Oh, like hyperlink out.
Yeah. And
okay.
so, it's in my eyes, this is a bit BS, but anyway, it is what it is.
What's BS?
You're not getting a true rip of what information is out there. You're getting a rip of what's been paid. Like they're analysing what's been paid to be there.
I guess so. I mean, cynically, I'm pretty sure OpenAI is still reading everything.
Yeah.
But I don't know. Like last week or like 2 weeks ago, you were celebrating Reddit's deal with these guys.
From a Reddit shareholder point of view, I was.
Yeah. Why don't you celebrate this from a News Corp shareholder perspective?
Because I don't like News Corp.
And there we go. All right. Well,
anyway.
Before we get cancelled by the giant of Australian media, let's move on.
Yes.
Ozempic is these GLP-1 drugs just are making headlines around the world. Supply cannot keep up with demand. And we've seen a real trend of Australian pharmacies, pharmacies around the world, compounding like their own versions of it. The Australian government has just banned it. So like, I think like the startups, like the healthcare players like Eucalyptus and stuff were probably the biggest players in that space. It'll be interesting to see what happens there.
They've banned compounding or banned compounding for the diabetes drugs?
No. Just for these
the
GLP-1s.
weight loss,
Yeah. But we're also seeing over in the States more companies start compounding.
Yeah, so there's a company called Hims and Hers, which is essentially a generic drug manufacturer. They hit a 3-year high after announcing they now have a $199 weight loss alternative to Wegovy and Ozempic. Now, Wegovy goes for about $1,350 a month, so a significant drop in price. The stock's up 47%. The company is built off the back of essentially doing this. They reached almost $1 billion in sales by making a cheap generic version of Viagra. And they're now using that same playbook to hit up healthcare and weight loss. So it's interesting.
Yeah.
Stock's up almost 67% year to date. And obviously this is a response to the prices of these weight loss drugs at the moment. Slash demand.
Yeah. And then the final bit of news that we've got is around your biggest holding.
No.
Trump Media Corp.
Yes. Shares of Trump Media bombed last week because the company reported a net loss of $327 million off a revenue of just $770,000. So that was for the first quarter.
So $770,000 a year in revenue or quarterly revenue?
Quarter.
Okay.
Yeah.
So that's like a $2.8 million run rate.
Yeah, but remember when they listed, they said that their previous financial year was 4.2 million. So they're making less and less revenue as time goes on.
That's not good.
No.
But I was going to say, if that Trump Media gets a $8 billion valuation on 2.8 million in revenue, then Equity Mates Media.
Oh, here we go.
What are we getting?
Yeah, we should be up there. But anyway.
Did you follow
It's gonna go to zero.
You reckon it's going to go to zero?
Yeah.
Yeah, not before Trump sucks billions of dollars out of it.
Yeah.
But did you see the news with their auditing firm?
The auditing firm has been like a dodgy auditing firm to like 50 other companies
Yeah,
as well.
yeah. So the SEC has shut it down. BF Borges. And I don't think this was anything specific to Trump Media, but it was notable that Trump Media chose them as their auditor.
Yeah.
Essentially, this auditing firm got more and more and more publicly listed clients, but they weren't putting any more staff on. And that was like a red flag to the SEC to be like, hold on. And apparently, reportedly, allegedly, all of the Lees, they were just like, whatever the company said, they'd just sign off on it.
Yeah, the ultimate tick box.
Yeah. So now Trump Media has to find a new auditor.
Good luck.
As well as all these other companies have to find new auditors. Like, very short odds for me that all of those activist short sellers are sniffing. They've got this list of companies that had this auditor as their auditor, and they're looking at them pretty closely. But it would be interesting to see when these guys have to go to other auditors, if anyone's sort of caught with their pants down.
You wouldn't want to be associated with the guy. Anyway, that brings us to the end of news headlines. Plenty happening. Let's move on. All right, Ren. Well, I said at the top, we've got a new segment called Mr. Beat Up. Stocks are down but not out.
Yes.
And that's this point in the show, a new segment.
Mr.
Well, we've got to welcome Mr. Beat Up to the studio.
I have the beat to describe
Good morning, gentlemen.
Are we sharing your real name, Mr. Beat Up? Or?
Sure.
Okay.
Yes.
So this is Simon, who works with us, who just tells us over and over again in the office when stocks are down and when he's buying them.
That's
and
right.
Seems to have made a bit of a habit of buying these beat up stocks.
Well, yeah, I only tell you about the winners. But, I go on about this a lot in the office. You guys said, well, stop talking about it downstairs. Come up.
Yes.
Tell the audience what you're thinking.
Yes.
Let's have a chat about it. So
So
here we are.
So I think to start with, let's talk about what you're looking for with the beat up stocks, what we're talking about here. And then let's establish your bona fides with some of the beat up stocks that you've caught on the way back.
Yeah, definitely. So I do have a bit of a criteria. There's a few things generally I like to look for. First of all, obviously the stock needs to be down significantly. So probably 30 to 50, even more % is good. Negative media attention, maybe leadership issues, maybe some regulatory scrutiny, maybe some investment decisions, mistakes, some change in strategy people aren't liking, and also financial results maybe missing expectations. But I guess crucially, thinking the market's overreacted to these short-term issues and the stock price is now not accurately reflecting the long-term potential of the company.
Makes sense.
Nice.
So what are some of the names that are in your portfolio?
Well, yeah, some that we've talked about a lot in the office. Obvious one, probably Netflix. You know, a couple of years ago, lost users for the first quarter ever due to the Russia exit. Also introduced the password strategy clampdown. Market panicked a bit.
Yeah, so I think it lost 70% between the end of 2021 and the start of 2022 for both those reasons.
No. In the end of 2022?
No, like end of 2021 and start of 2022.
Oh.
Like in like a matter of months, it dropped like 70%.
Yeah, right. Okay.
Yeah. And because of those two reasons, the big one was firstly Russia. They said for the first time ever, our subscriber base has gone backwards. And yeah, the second was the password crackdown.
Yeah.
And it just serious overreaction from the market.
Yeah, you're right. It was in like 6 months.
Yeah, just boom.
And that's when
So-
Mr. Beat Up
Mr. Beat Up started circling.
Yeah, well, I think with that one, I just thought the thesis for me was the password crackdown. You know, if you're borrowing someone's password, the person's password you're using, they're not going to cancel if you're not getting in anymore. What's probably going to happen? You're going to have to get your own account. I don't think there's many people who like divvied up their monthly subscription. People were just, you know,
Just
using
sharing.
their family members.
Yeah.
So that was the thesis, and it kind of, I guess, it played out and skyrocketed about 250%.
And so then the second, probably more recent one has been Meta.
Meta, yeah, we love Meta, Alec, don't we?
We do.
Yeah, so you remember a couple of years ago, so much negative sentiment against Zuckerberg, Meta. They're kind of metaverse bets, if you like, and there was a lot of regulatory scrutiny going on at the time. But I guess the reality was half of the world's population was using their apps, and they still had 5 of the 10 most downloaded apps in the world, making a ton of profit. And they lost 700 billion of their market cap during that period. Price to earnings fell below 10. And since the stock's back up over 400%.
Yeah.
So
And you did get in on that.
the few in the office got in that. We did.
Yes.
We got lucky about
I think
timing
it was
there.
just you and I, wasn't it? And
Oh,
then
it was
Alf and Bryce
That's right,
just
yeah.
looked on from the sidelines.
Yeah.
Well, let me bring up something here. Let me bring up something. Simon also nicely reminded me of this, and we have this on tape, and we'll play it in a second. But Ren and I have a bet.
I actually knew this was coming. Yeah.
Ren and I had a bet ages ago it was at this point in time where they'd reported and they'd been smashed, and the argument was they still had 1 billion people on their platform. And our bet was that I thought it would hit a $1 trillion valuation, and you thought it would never get there.
And when the facts changed, my opinion did, and I put my money where my mouth was.
Just so I can lap this up.
The context here is Bryce and I have a bet. He reckons Meta will break through the $1 trillion mark. I don't think they ever will. So there's a little bit of vested interest here.
I mean, it seems like every company is now worth more than $1 trillion, right? So
honestly, Equity Mates is raising at $1 trillion.
there you go.
Look, happy to admit I was wrong about that. In fact, I'm glad to admit I was wrong about that because it has come roaring back. It's now 1.2 trillion.
Yes.
How did you not put...
I don't know.
Like, if you're making that bet...
I know. I've done that plenty of times on
my
this show. I've done that plenty. I've done that so many times on the show.
Well,
Anyway.
That's why we got Mr. Beat up, to
Yes,
make sure
yes,
we're keeping an eye
yes.
on the stocks that are beaten down. So you spoke about Netflix and Meta. You've got a company that you want to bring us today, and I'm sure it's going to be Boeing.
Close.
Oh,
They were in the
actually.
top 3.
Really?
We had Boeing. I also looked at Woolworths, another one,
Yeah.
probably most hated CEO in Australia at the moment. But my number one here today, don't miss this one, Bryce.
No, not advice.
it's not.
Not financial advice. Tesla.
Okay, all right. So the point of this episode, the segment going forward is Simon will bring the stocks. So you've bought Tesla today. So if you can go through the above criteria that you spoke through, maybe some of the major ones that have led to the beat up, and then why we think it's overdone.
Yeah, definitely. So I actually wish I'd come in a month ago when we were first chatting about this in the office, because it's actually up 25% since then. But zoom out a bit, it's still down over 50% against all-time highs.
Okay.
Negative media attention. I mean, come on, Musk, he's at war with traditional media. I think it's fair to say they are pretty obsessed with him as well. I think, Alec, you put a post up on our Instagram recently that Bloomberg Business Week, 18 out of the last 20 or
No,
20.
18 of the last 30.
18 of the last 30 posts were about Elon Musk.
Elon Musk, yeah.
And I think generally they love piling onto him at a hint of an issue. Probably the best example is every time Tesla do an over-the-air software update, like you might get on your phone, the media generally frame that as a safety recall, where you're thinking about cars going back to the garage, but it's generally just like a small software change most of the time. Although the Cybertrucks did
Yeah, I
actually
know.
get returned.
I didn't want to interrupt, but they have had a physical recall of every Cybertruck.
Yeah, the 4,000 first Cybertrucks got called back. So definitely some media negative sentiment. Leadership issues, again, I mean, there's lots of talk how distracted Musk is, his other endeavors on X, like everything going on with Musk, big distraction.
Yeah, his $50 billion pay packet that he's trying to get through.
What were your thoughts on
Corporate
that?
governance?
Let's not get bogged down. I mean, really quickly, I think my thoughts are it's an outrageous thing when you read it in the headline, but when you actually look at the story a little bit closer, it's not as outrageous. It was like performance shares that he was promised, and then he hit all the performance milestones.
Yeah.
And so it's a bit like now they're retrospectively taking it.
Yeah, I don't really know where I stand with it either, but I can see both sides for
it's
sure.
It's an ungodly amount of money, but it's like there was a deal in place.
There was a deal, yeah. I guess then changes in strategy. They've made their first ever price cuts to the Model Y cars and Model 3 cars. That spooked investors a bit. Cut 10% of the workforce, and they actually missed expectations. Sales growth slowing, deliveries year on year fell. It's fair to say it's been beaten up a bit.
Yeah.
So here's the question, like, because the obvious thesis that you can draw from a lot of those things is that they're losing their shine of like a crazy tech company and getting into the reality of being a low margin, high capital cost car company.
Yeah.
But
So,
you're saying that the market's wrong.
look, there's a lot of experts who are still bullish on the electric vehicles business.
Yes.
There's a lot who are saying they're now a car company. Where I'm coming from this is actually I see the most game changing outside their core electric vehicle businesses.
Okay.
So whatever your thoughts are on the electric vehicle business,
Park it.
park it.
Pun intended.
And really, it comes down to the size of the problem for humanity as a whole that this could solve if they get it right.
Okay.
So before revealing what it is, I'll start by giving you some stats just to tee it up. And these are from the World Health Organization at the end of last year.
Yeah.
So approximately 1.2 million people die each year in road traffic accidents. Another 20 to 50 million suffer non-fatal injuries and often permanent long-term disabilities. This one really shocked me. Road traffic injuries are the leading cause of death for children and young adults between 5 and 29 years old. And it costs most countries 3% of their gross domestic product. Okay, so it's a huge problem. Agreed?
Yeah, it's
I know where you're going, and I'm not
reasonable.
sure I agree, but yeah, keep going.
So the solution. self-driving technology could drastically improve road safety. So it's not where it needs to be yet, but experts are saying it's going to be at least 10 times safer than humans at driving. And Tesla is the best placed company in the world right now to lead in that space, and it comes down to the data they have. So for years, every Tesla on the road's got cameras. There's been a data point feeding into, think like a massive brain, which is getting better and better at self-driving with the more cars they have and the more miles those cars are doing. And competitors are just no way near Tesla for that data collection. So they've got people call it a data moat, or you think of a huge network effect, and it's just snowballing on itself. It's like Google, really. Google's got more search data than everyone else. People use Google, it gets better, it feeds on itself. No one's going to now use an alternative to Google, and that's where Tesla are trying to get with this autonomous vehicle data or self-driving data.
I've got to say, the Tesla's thesis is different to the other two theses. The other two theses were the business hasn't changed, but the market has overreacted to the future of that business. Netflix is still Netflix, Meta is still Meta. But this is there's a fundamentally new business line and a new technology. It's not like an overreaction play. It's a new thing.
Yeah, I guess it's the long-term business where it's heading all along the play, I think from Musk has been saying it for years, is to get to these electric vehicles full self-driving, and another aspect of that, which I'll come on to in a second. So I think people are just getting too hung up on the short-term noise of the core business. So
nice. Okay.
All right, we'll get on to your second point, because I've got a little rebuttal that I want to get into.
Nice. So yeah, I think they're well placed to solve this issue for humanity, and there's two monetization methods from that. One is obviously software subscriptions, which they're actually doing at the moment, $100 a month in the US, full self-driving. They're actually making hundreds of millions on this already. So it's really happening at a small scale, and that's going to keep growing. The second one, and this is where some people are getting really excited, is robo-taxis. So think Uber, but without their largest cost, drivers. And this is what you get. And Tesla are actually revealing their purpose-built robotaxi in August this year. And they've said that millions of their Teslas could actually be converted overnight into ride-sharing vehicles. So probably one of the most underutilized assets in the world is a car. It sits there not being used most of the time. Now you can send it out when you're at work and earn money for you.
If people believe the part of the thesis that Tesla will be the first to deliver self-driving, almost nothing else matters. They will be a multi-trillion-dollar company. If they truly can do that, and Waymo and GM and everyone can't do it soon after them. But the question is for me, since we've got interested in investing, self-driving has always been 5 years away. Yeah. It's always been almost there. And for every step forward, there's steps back. This is GM's self-driving division. They were on the road, and now they're off the road because there's been some pretty terrible accidents. Tesla takes a step forward, and then the National Transport Safety Authority tells them to pull it back because it's unsafe or they didn't get approval. Waymo rolls out to a city, but it seems like their technology isn't super scalable.
Yeah, 100%.
Yeah.
100%. I remember when I was in the UK in Milton Keynes, I was working, they were doing tests 6 years ago, and it was this is going to be out in 2 or 3 years. And it just hasn't happened. I personally think it's going to be something which is going to be slow until it happens, until it's proven and the data starts showing how many lives are being saved, and then everyone's going to want to try and make it happen really quickly. So I think it's going to be a tipping point where they nail it and can prove, and then it's going to happen quickly. But when that tipping point comes, who knows?
But what you're saying is the opportunity of the 50% drawdown on the Tesla stock price is an interesting point.
If you believe in this, you want to get in Tesla at some point.
Yeah.
Is this the time?
Yeah.
Is it the time?
Sounds like it was a month ago.
Look, this may not be a ringing endorsement for some, but ARK Invest. Okay, I've got to give you information here. ARK
Don't
Invest.
shoot the messenger.
They have a price target of $2,000.
They also have a price target on Bitcoin of 1.5 million.
Yeah.
We might be coming back to this episode in 5 years' time.
Well, let's note this episode down. 27th of May release.
So the flip side of Tesla is right now it has a 15% profit margin. Traditional automakers sort of sit around a 5% profit margin. So if its margin comes back to the pack, it could sell 3 times as many cars and still be making the same profit it does today. But the other part of Tesla is it currently trades on a price to earnings of 46. Here's a few of its peers. BMW's PE of 6, GM 5, Ford 12, Toyota 9, Porsche 3, Volkswagen 4. So you could see a world where it sells 10, 20 times more cars, but its profit margin comes into the midpoint of the car makers, and its PE comes down to the midpoint of those car makers, and its share price doesn't move.
Yeah.
And so I lost my last bet that Meta is never going to be a $1 trillion company. Tesla is not going to be a $1 trillion company. Nah, look, if it gets self-driving right, I could say it.
No, you're spot on. I think if it can't break out of just being a car company, spot on. But if you believe it can do some of this other stuff and other stuff beyond that, which we haven't even talked about, battery storage, robotics, insurance, they've got a track record of innovating and beating the market's expectations, apart from this quarter.
All right.
Nice.
Well, watch
I like
space.
this segment. Yes. Thank you, Mr. Beat Up. I think firstly, if you have a company that you think is down but not out and you would like Mr. Beat Up to have a look at it, let us know, equitymates.com/contact. But similarly, Mr. Beat Up or Simon will be back when the moment is right for his next one.
Yeah. I think the beauty of this segment will be Simon can run his eye over it and say, oh, this is interesting, or this is a falling knife and you don't want to catch this one.
Yes.
It's just going to keep falling down.
100%.
Yeah, like
Yeah.
Woolies, keep falling.
Impossible. Anyway, we're going to take a very quick break. We'll be back on the other side with a question around the Japanese yen and how we can think about investing with currency. We'll be right back. Welcome back to Equity Mates Investing. It is time for...
Let's ask the community.
Hey, Equity Mate.
I just had a question.
Hey, Bryce, I've got a question.
Answered.
That's right. If you have a question that you would like to submit, head to equitymates.com/contact. But today's question has come in from Jordan Boyle. And Jordan asks, hey team, I'd be very interested in hearing what your thoughts are on the current low value of the Japanese yen and why the index is trading at all-time highs. Do you think that this presents any investing opportunities for us?
The all-time low of the yen is actually a common theme because we have another question that came in from Nick. With Japan AUD at an all-time low, is this the time to buy some exposure to Japan with double upside in currency and growth?
Perfect.
So it is certainly something that is on people's mind.
Yeah, great. Well, let's jump into it. I think firstly we should address why the yen is low. So primarily two reasons. Firstly, monetary policy. The Bank of Japan has historically kept rates at incredibly low rates, even negative, for a long period of time.
It just went back to positive this year, didn't it?
Yeah, just. So it's been in negative territory. Contrast that to major economies around the world who have been hiking rates for the last 12 to 18 months.
Yeah, and the reason why is when there's a differential in rates, money will move to where the rates are higher so they can get a better rate of return.
Yeah.
There is just like billions or trillions of dollars just constantly seeking the best return.
Yeah. So plenty of money flowing out. Secondly, economic performance. We know that Japan has faced pretty significant structural challenges with its economy over the last 20, 30 years, and that includes aging population and low productivity growth. Of course, slowing economic growth leads to more money outflow from economy, looking for other opportunities.
Also, just like a massive debt to GDP. Like Japan's government is so far further down, like quantitative easing. Like not in Australia, but in the US, the central banks was buying bonds to like add liquidity to that market and stimulate. In Japan, they bought so many bonds that they couldn't keep buying bonds, so they started buying stock market ETFs. Yeah,
Biggest owner of ETFs in Japan or something. It's crazy.
It's a structurally challenged economy with some great companies, I think is how you explain Japan.
It's wild. So that's why the yen is low. Jordan also asked about the index trading at all-time highs. So this is something that's happened in the last sort of 12 months. The Japanese market has ripped back. Couple of reasons for this. Corporate earnings over in Japan have been apparently improving profitability across the board, and we know that then drives investor confidence. So people are starting to get a bit more confident with the performance of the stock market.
Just on the corporate earnings as well, like there's a self-reinforcing feedback cycle. Like a lot of the big Japanese companies are exporters. So like think Toyota, they sell cars all around the world. As the yen gets weaker and they're selling in Australia and earning AUD, in the US and earning USD, in Europe and earning euros, when they report, they convert all that money back to the yen. So like it helps these exporters.
Yeah.
Yeah.
Otherwise, there's foreign investment. So when currency is weak, it does provide an opportunity, or it does become attractive for foreign investors to come in and buy up assets and take advantage of the weak currency. So that's been driving stock market growth. And then the government has actually intervened and brought in a number of policies to encourage good shareholder returns. So they're encouraging companies or forcing companies to have a certain level of liquidity with their stocks. They've changed the structure of the stock market and where companies fall if they're like classified as growth companies or long-term companies. So they're really trying to invigorate trading, I guess, and companies to do the right thing to encourage shareholders to get back in the game.
Yeah, it also helps that the Bank of Japan owns 475 billion worth of exchange traded funds. 475 billion US dollars worth of exchange. So that's 70 trillion yen.
They'll be super happy with the last 12
so
months.
there's a bit of they're definitely helping the demand side of the supply and demand equation. But look, so that's the story, I guess. The Japanese stock market is doing well. The yen is weak. The question is, as investors around the world, but you and I are sitting here in Australia, like, what should we do about that? Is there anything we should do about that?
Well, I think firstly, you've already mentioned it. It provide, like, when you're looking at investment opportunities, firstly, if you're looking at the domestic market and buying stocks that are going to benefit from a weak domestic currency, you've spoken about exporting companies, like companies that derive so much of their revenue from exporting product. They're likely to see more business in a time when revenue is low. So that's the first one. Again, travel and tourism and companies that benefit from that. If I'm seeing Japan is going to be a cheap place to travel to, and the Aussie dollar is going to get me further there than it is if I go to the States, I'm more likely to go travel there, and that has flow-on effects to the companies that are based domestically. And also, again, we spoke about foreign investment, but real estate and sort of real assets as well in that currency tend to do well. So from an investment point of view, if you're looking at investing domestically, that's how you can think about it. Otherwise, if you're looking at just investing in the ETFs, for example, that track total market, but you would want an unhedged version if you're to do that.
Well, I think that's really the question. So, like, if you want to pick individual Japanese stocks, you've mentioned a few sectors that would benefit, but like, if you want to pick individual Japanese stocks, you've got to do the work, and Google Translate's going to have to work in overdrive, or you're going to have to know some Japanese to get in the weeds of these companies. If you just want to buy the overall index, for me, the answer is worrying about currency is an important consideration if you're trying to make money in the short term, but shouldn't worry you if you're thinking long term. And, you know, like, there is certainly money to be made, and there's like a double upside if you get the right company or the right index that's growing, and then you also get the currency free kick as well. And as you said, if you're buying an ETF, it should be unhedged. The longer you extend your time horizon, the less that currency movement matters, and the more the underlying asset or the underlying index matters. And so for me, when I'm thinking about would I invest in Japan, I'm thinking long term, like I'm thinking decades into the future. And for me, I don't want to own the Japanese stock market for decades in the future, because the low yen entry point now and the current good share market performance, I think over time is going to be eroded by just the large structural demographic issues that Japan faces. And so for me, like, I think there's nothing wrong with trying to make a quick buck and like trying to trade if that's your game and that's what you're trying to do. But it's not my game. It's not what I'm trying to do. And I'm pretty happy letting this opportunity go through to the keeper. I think there's better growth opportunities in other parts of the world. Sorry to our Japanese listeners. But you know what I am doing? Alice and I have been keen to go to Japan, and this has certainly been the impetus for me to look at booking a trip to Japan.
Get on it.
Yeah.
Yeah, there you go.
What about you?
Same reason. I'm not really interested in getting exposure outside of, well, the ETFs that I have exposure to don't actually have Japan in them because they're all these Asia ex Japan for the reasons we've spoken about. And I think there's too many structural issues at play that that don't excite me about the opportunities long term. Yeah. So for that reason, I'm out.
If you wanted some Japanese exposure, you could look at like a global 100 ETF that would probably have like the Toyotas and stuff in it.
Yeah. Car manufacturer ETF, there'd be plenty out there.
No, well, I mean, like, what are the other big Japanese companies like Sony and, they're the ones that you probably want access to. Buffett bought a whole bunch of the Japanese trading companies. But again, like, you need to know what you're buying.
Thank you for the questions from Jordan and Nick. Keep them coming if you'd like to put one forward for the show. equitymates.com/contact, and we'll make sure we get it in here. But Ren, Simo, thank you for coming on, Mr. Beat Up, and Ren, always a pleasure to chat stocks. And guys, we'll pick it up next episode.
Sounds good.